If you want to make $100,000, $1 million, $100 million, anybody can do it. Welcome to Real Estate Market Moves, where every week we bring you all of the latest news and information in the real estate market, commercial, residential, multifamily, so that you will know how to make your moves when it comes to investing in real estate. On that note, I wanted to announce that we did just release a new real estate wealth system. I partnered with Verified Investing. The link is in the description below where you can find the course, but we cover everything: commercial, residential, multifamily, real estate development, land, industrial. Everything is covered. There's 3 different courses. It's a 3-part series. You can get the course bundle for a very special one-time payment of $58.97. So this course has just gone on sale this week. It's the new real estate wealth system. But let's jump in right now. Texas multifamily real estate is facing a lot of pressure. As we know, the commercial multifamily real estate sector is under pressure because of rising interest rates. Texas has taken the biggest hit, largely because about 63,350 units are currently in the pipeline. And the annual average of around 49,000 units is what's typical over the past 3 years. Tons and tons of inventory come into the market in Dallas, Fort Worth, San Antonio, and Austin. Austin is also one of the biggest residential housing markets that has taken a hit lately. Also, office landlords are facing unprecedented loan crisis with rising defaults. We've seen buildings sell. Most recently, a building sold in DuPont Circle in DC, an office building, a couple 100,000 square foot office building, sold for about $20 million when it was originally sold for like 70 or 80 million, something crazy like that. Just really unbelievable situation we're seeing in commercial real estate for office around the country right now. And, a lot of these assets will get repositioned. Most of them are 10 to 20% occupied. Some of them will get torn down and redeveloped into other types of uses. So really interesting times in the commercial real estate sector right now with office and with multifamily. But the question is, will this tank the banks? Will this tank the economy? Will this tank the markets? The thing is that, there's the commercial real estate sector is about a it's about a $30 trillion industry. $30 trillion industry. About 1.5 trillion in loans are coming due over the next 18 to 24 months. And you have buyers like Blackstone, related companies like that are coming in and buying these portfolios off of the bank's books, before anything significant happens. So what happens really is all of the equity is getting wiped out, and then the assets go back to the bank. The equity gets wiped out. In other words, the investors, the limited partner investors in these funds, could be private equity, it could be institutional, and it could be individuals investing in syndications. They're the ones that lose all the money, get wiped out. The asset goes back to the bank or goes back to the servicer, and ultimately, at the end of the day, gets sold for pennies on the dollar, sometimes 80 cents on the dollar, sometimes 20 cents on the dollar. It just depends on what the asset is. But there are buyers out there, so these will get absorbed. So it's not a systemic risk at this point. It's just not big enough when you're talking about a $30 trillion industry and you've only got about 1.5 trillion at risk. It's not huge, although in China, it is a big deal. On to housing, the weekly housing trends ending the week of November. Basically, the median listing price grew by 0.7%. As we know, inventory levels are still way down. New listings, as a measure of people putting their houses up for sale, were up this week by 6.4%, which is unusual for this time of year. Typically, inventory levels drop a little bit from a seasonal standpoint going into the holidays, but again, up 6.4%. It's all relative because there's so few houses on the market right now. These percentage rises don't mean a whole lot. If there's only 10 houses on the market in your neighborhood, one goes up, that's a 10% increase, right? So you can't really pay a lot of attention to these when you still have about a 50% inventory level compared to what's normal. Active inventory increased slightly, with for sale homes at a 0.6% above a year ago, and homes spent 2 days less on the market compared to this time last year. These are all just national averages. As we've talked about, real estate is hyper local. Every market is different. Every location is different. The problem is lack of inventory in most markets. Some markets like San Antonio, or not San Antonio, but Austin, Texas, Phoenix, Arizona, some of those markets you're seeing inventory levels start to rise. And with interest rates where they are, there's not a whole lot of demand either. But in other markets, there's still plenty of demand, multiple offers on properties, and selling in days and weeks in some markets. Another thing, buyers contend with limited inventory and high mortgage rates. which is affecting the down payments. Down payments are climbing on properties. Obviously, as the median house price goes up, you have to put more down. Down payments climb nationwide as mortgage rates increase, and the accumulated savings continue to be a factor, even as saving rates are below historic levels. So the consumer is under some pressure. And then it's a tale of two markets, right? You see mortgage demand jumps to a 6-week high as interest rates continue to drop. The 10-year was down over the last few weeks while the markets are up, which brings mortgage rates down. So the demand, the average contract interest rate for this 30-year fixed rate dropped from 7.61 to 7.41. So applications to refinance increased 2%. So when you think about these percentages, they don't mean a whole lot. Applications for a mortgage to purchase a home increased 4%, but week to week, we're still 20% lower. So, these things are all just relative. And then when you talk about the tale of two markets, mortgage demand jumps to a 6-week high, while we see that home sales fell to a 13-year low in October. So it's really, again, when you have this level of low inventory, this level of lack of activity with transactions being down in the commercial sector, 80%, in the residential sector, probably 60% in most areas, you can make the numbers move pretty quickly with very little activity. So once again, the real estate wealth system has been released. You can check out the link below. You can buy all 3 courses for one low price. And basically, there's a course on investing in residential real estate. There's a course on commercial and multifamily, which covers industrial as well. And then there's development course, the ground up real estate development, if you want to become a real estate developer. These courses are fantastic. They cover everything I know, everything I've learned investing in all types of real estate, doing all kinds of real estate deals, ground up, value add, opportunistic, pretty much everything. And also some exclusive interviews with some of my top clients, my one-on-one clients that I'm mentoring around the country, doing all kinds of different real estate, residential, commercial, multifamily, real estate development, how they got started, how they exited the W-2, full-time W-2, just like I did, how they got into real estate, how they found their first deals, how they funded them, how they're scaling. So we get into detailed nitty-gritty. So all you got to do, go through the courses, copy what they did, and you can do what we have all done over our careers, doing hundreds of millions of dollars in deals, over $1 billion collectively with all my clients, assets under management deals in progress. And you can see what some of the people are saying about the courses and about the coaching and mentorship. So anyways, go check it out. The links are in the description below. I'll see you on the next video.